The pillars of what we teach are that technology scales medicine, and it's one of the only ways to accomplish the quadruple aim in healthcare of better quality, lower cost, better access, and lower burnout healthcare. My picks for what I invest in try to hit all those. What I and my favorite VCs have found is that when you have someone who's survived crises, right, and have proven that they have adaptability and resilience, usually that's from having a rich life. They've got to get founder market fit where their self-identity is entwined with the mission that they're trying to attack and solve. They don't give up, right? And when you might traditionally write off an investment and a venture, they keep going and they find a way.
Zen actually might be the most successful angel investor I know in the space. I'm going to put you on the spot with a little rapid fire round. Tell me if it's underhyped, just hyped enough, or overhyped.
Great. I love the game show.
Yeah, it's a game show. Okay, so
hyped just right. I mean, it's going to be incredible.
This is Second Opinion. I'm Christina Farr.
I'm Ash the News. And I'm Luba Greenwood.
Welcome to the pod, where each week we navigate what's really going on in healthcare through strikingly candid conversations with the entrepreneurs and investors leading the charge.
Thanks for joining us. Let's dive in.
Hi, everybody. Welcome to the pod this week. I have a very special guest that I'm so excited for you to meet. His name is Zen Chu, and he and I have been friends for, must be a decade. He's an amazing presence in the digital health industry. And he likes to say he's a retired entrepreneur, but he's also teaching at MIT. He just told me that he's had about 10,000 students come through the program where he's teaching them really how to build digital health companies. And he's a super active angel investor, which is one of the reasons I brought him here today, because I think Zen actually might be the most successful angel investor I know in the space. He's shaking his head, but he's had some wins, and we're going to talk about those wins as well as just some of his tricks of the trade from having been in the industry for this long and really seeing it from its infancy to now, this more mature stage that I'd argue that we're in. So Zen, let's just start by hearing a little bit about your background. People may be curious to know even why your name is Zen, where that comes from. So maybe we'll start there.
Yeah, it's my given name from crazy hippie parents from Haight-Ashbury in the late 60s. I grew up in the Tenderloin, but all over America, Hawaii, Texas, California. I was always the outsider, always the new kid. I went to 13 schools by high school and a whole series of crappy schools. But now I find myself being able to teach these incredible students at MIT and Harvard Medical School and our fantastic health science and technology MD PhD program.
Yeah. So what I love about your background is, you're not somebody who's gone through the typical path per se, like that you see with a lot of people in venture capital today. And I think it just really gives you a different lens on things and a lot more empathy than maybe I see from most folks. So can you share a little bit about just, what you've learned in the course of your life about what makes for a great entrepreneur, and how is that different than the typical that we tend to see, especially if you look at the numbers of just coming out of these Ivy League institutions? We tend to favor a certain type. I call it central casting. So how do you kind of use the background that you have to kind of find these non-traditional founders?
Well, yeah, we title our class every year, and this year it's Creative Destruction, which we thought was appropriate for the age that we're in and what NIH folks and anyone who's got research, but also our folks that go out to Silicon Valley. That's the optimistic view, is that creativity will come out of this wanton destruction and a bunch of vacuums. But we basically have physicians and PhDs and MBAs and Masters of Public Health students and executives from healthcare that are coming back in or burned out and thinking about how to restart. And it's really about adaptation in these times, right? And that favors startups. And the incumbents aren't solving the healthcare problems anyway. They keep getting worse, right? Because they're playing these games that are either regulatory capture or, there's lots of examples of bad competition in healthcare, especially where you got multiple hospitals in the same city like we have in Boston. But, the pillars of what we teach are that technology scales medicine, and it's one of the only ways to accomplish the quadruple aim in healthcare of better quality, lower cost, better access, and lower burnout healthcare. And I think, my picks for what I invest in try to hit all those.
Yeah, so let's talk a little bit about companies that you have invested in, because you've been behind some incredible teams, and you typically come in as really one of the first checks, if not the first check, to some of these teams. So you're seeing something before anyone else is. And I'll give a few examples. Abridge, which is, now worth many billions of dollars. You were one of the first folks to really believe in what that team was building with AI that would really replace human scribes in the medical field. And then another company that you've been behind from the very early days is PillPack. And that was a team that sold to Amazon, again, for like a very big outcome that was really disruptive in the pharmacy space. So would love to hear, Zen, a little bit about, you said adaptation is what you're looking for. What about just qualities that you're looking for in founders? Like, how do you, and I think this is so important. It's really about the team. And when you're getting in that early, like there's not that much else to go on but the team. So what are you looking for from these early teams?
Well, yeah, I think what I and my favorite VCs have found is that when you have someone who's survived crises, I think most of the students that pass through MIT and Harvard Medical School, thankfully, are really free of a lot of trauma and really hard parts of life. But that means they're untested in battle, right? And, folks' true character really comes out when you're in crisis. And so I love folks that have had non-traditional backgrounds and have proven that they have, adaptability and resilience. And usually that's from just having a rich life and those type of folks. But then you have to make sure that their personality fits with the mission that they're on. First, missionaries, not mercenaries. So many folks coming out of the business schools are pretty mercenary, but we need missionaries that really self-identify as wanting to solve that problem. And the arc of our class and the arc of the MIT Hacking Medicine hackathons is that we focus them on problems first before they jump to solutions and really go deep on those problems. So they've got to get founder market fit is one way to think about it. And if you get that, where their self-identity is entwined with the mission that they're trying to attack and solve, they don't give up, right? And when you might traditionally write off an investment in a venture, they keep going and they find a way. And so your failure rate ends up being a lot lower because, the ones, and I've invested in plenty of failures and started one myself, but I've only lost money for other investors once. And that was when I handed it off to the wrong CEO. So, I think there comes a time in every startup where you have to do a massive pivot or you're facing death. I just spent the last 6 months of my life rolled off and resigned last week on a company that I was saving that, they could have all walked away. And we just had some founders that would not let it fail. And, it's kind of feast or famine out there. You've got Abridge that took 2 weeks to raise $250 million on the strength of their revenues and the fact that they're in over 100 health systems now. But you've got so many startups out there that are on the ropes and maybe raised money in 2021, 2022, and, got over their skis in valuations. And it's just really hard to not do a down round or to keep the team together. And, it's those leaders, it's leadership and sticking to it and really wanting to still solve that problem. Those are the ones with the startup resilience keeps them from dying. And so I think that's what you look at, because you're right. You're only picking on teams. It's slideware. It's earlier than market studies exist, or the market studies are just plain wrong. And so you've really got to get down to brass tacks and figure out the deep problem and the deep psychology of, will patients do this? Will doctors really change their behavior? It's so hard to get so many doctors to change their behavior that Oftentimes we're telling them just go for the young doctors or go for a subsegment that really sees this problem. And then you'll have to wait for the others to die or retire because they'll never change in healthcare.
Yeah, so I wanted to get a little bit deeper on this you basically brought up, I think you're saying grit. Like you're really looking for grit essentially. And I personally have been fascinated by the career of Michael Moritz. Some people say he's the best investor of all time.
Another journal.
Yeah, and he was a journalist, so this is another reason why I find him so intriguing. But I've spoken to friends at Sequoia, and they've told me, and this is Moritz's fund, and they told me that one of the things that he did differently is, he would get into a room with a founder. This would be the first meeting, and the founder might pull out the pitch deck, and he would say, "No, put the pitch deck down. What I want to talk to you about is your childhood. Where did you grow up? What was your relationship like with your parents? Did you go to boarding school? Did you go to day school?" He really wanted to understand kind of the origins of this person, their story, what was really driving them. And if he heard that they had experienced, like you said, some kind of hardship in life, some kind of adversity in life and gotten through it, he knew that they might have what it took to really survive in those moments that were inevitable with startups. And I think he knew that because he was a journalist and because he was a biographer, and just fascinated by the human experience and human psychology. And these are also things that you just mentioned. So I'm kind of curious from your perspective, how do you get to that grit question? Because I certainly don't get there when I look at a pitch deck for 30 minutes. That's not how I'm going to tell like the true nature of this individual. How do you like really get it out of them?
Yeah, I get to share some of my, crazy war stories and startup stories and childhood stories. And that helps. But I agree with everything you said and what Moritz believes, because that in the end is what's going to keep them on the mission. And we've had the mother of my children and I have, invested in probably 150 startups at the earliest stages. And what we've found is, and we have examples of having written off startups, and those founders, ended up selling to Facebook for $200 million after we wrote them off because they just stuck with it, right? And so it's fun when that happens. There's plenty of failures, and there's lots of ways to fail, and there's fewer paths to success. And grit is a huge component of figuring it out.
Hey everyone, we'll get right back to the conversation after a word from our sponsors. This show is sponsored by Midi Health. There are certain things that come with age: wisdom, experience, and knowledge, to name just a few. But if you're a woman over 40, it can also bring some less desirable things: hot flashes, insomnia, brain fog, moodiness, and weight gain, all symptoms of menopause and perimenopause. Yes, hormonal transition is a fact of life, but that doesn't mean you should have to accept its symptoms as just another part of aging. The experts at Midi Health understand what you're going through and know how to help. Midi Health is the only virtual care clinic for women navigating midlife hormonal transition. They support you with safe, effective, FDA-approved medications, as well as supplements, lifestyle coaching, and preventative health guidance. What's more, all their services are covered by insurance, and they're conveniently accessible through telehealth visits and 24/7 messaging. If you're over 40, use all that wisdom you've gained over the years and visit Midi Health. You deserve to feel great. Book your virtual visit today at joinmidi.com. That's joinmidi.com. So let's talk a little bit about angel investing. I've been doing some of it, myself. Only since I left journalism have I been allowed to do it, but I've been kind of slowly building up my own portfolio, and my husband also has a portfolio. And I would love just some practical advice, from you to listeners about when is the right time to start thinking about angel investing? And then how do you allocate, net worth? How do you think about kind of just the right allocation? Like what amount of your personal, net worth should be in the stock market or in index funds and in really safe investments? And then do you have any thoughts about, what is the right amount of money to be setting aside for these kinds of startups? And then how do you kind of go about picking them? My husband and I have tended to invest a lot in our friends, just as one example. And some people might say that's the wrong strategy because, we're mixing a lot of business and personal. But we believe in that strategy because we love supporting, what our friends are doing. And we choose to be friends with them because we think they're incredible people. And if we're wrong, then, there's no real downside because they know that we, believed enough in them to get behind them. And if they're right, then we all kind of collectively reap the rewards. So that's our philosophy. Would love to hear yours as a prolific angel investor and then just advice on getting started.
Yeah, well, in terms of personal asset allocation, I mean, I think back to a vacation that we had with some dear friends from Silicon Valley who are also fantastic big investors in some of the biggest VC funds now. But, we all started out in 1996, 97 together and raised our kids together. And, first you need your, what we call your FU fund, right? Since I came from nothing and, my single mom was a school teacher. My dad died when I was young of cancer. And so I've been working since I was 9 on the beaches of Hawaii to make rent. So, I have that empathy for that, the cognitive load of poverty. And then that's why everything is gravy to me, because I had a really low amount for what constitutes an FU fund that allows you that psychological freedom to then really take risk. And we got lucky and it happened early because my wife worked for Elon's first company. And so by 99, we had that money. And then we had to decide, whether we wanted to raise kids in Silicon Valley in 99. By 99, we had our second one on the way and we decided to move back to Boston, closer to family, and ended up raising 3 kids out here in Cambridge, and that life balance too. But in terms of asset allocation, I mean, you've got to be willing to lose all your money in each investment and be comfortable with that. And I totally agree with investing in friends when it's in your domain. Well, we've even invested outside of the domain, but you could lose your friendships in some of that. It starts to change the timbre of some of your conversations and friendships. Is this an investor update or is this a friend update? Can they be vulnerable with you and really tell you how it is? But I think, I've been lucky that I've had really fantastic investors mentor me starting in Silicon Valley. And then when I came out here, I learned from the Bain Capital founders, the real venture business, and then jumped to the other side because, as you probably shared on the podcast, VC is a get rich slow game. And so entrepreneurship is really where you can, be really aligned with driving a fantastic outcome for yourself and for your investors, and do it a lot faster. And so I co-founded 4 companies with fantastic scientists, and we continue to build that FU fund and pay off our kids' college funds and things like that. And then that just kind of frees you up to even think bigger. And of course, then you're trapped. I was trapped in that after a big success of my first MIT startup, going into a depression because you are trying to think about something even bigger and go even bigger. And that can be its own kind of mind trap.
Yeah, I hadn't even thought of that because I'm not sure I'm even that far yet into the success cycle. But yeah, you can imagine that, once you've hit big once, there's this sort of desire to do it again and again and again. And there's sort of a rush that comes with it. I would love to know though, now, Zen, as you've sort of had some time to reflect, you mentioned that your kids are really kind of going through college now. What excites you in healthcare today? You've had successes in some big areas like pharmacy that we talked about and AI. As you and I have known each other over the years, you've shared so many big ideas with me. And I think I don't want to speak for you, but I think what excites you is really disruptive thinking to go into even a monopolistic area within healthcare and say, what can we do to break this monopoly with something new, something that hasn't been done before. And just because it hasn't been done before isn't a good enough reason to not do it. So would love to hear what you're thinking about just kind of themes now. What is really exciting you? And every morning when you wake up, like where are you kind of wanting to spend time every day?
I'm humble about what I can do within healthcare, what one company can do. We have thousands of point solutions in healthcare that add up to a multi-trillion-dollar opportunity, but the system doesn't work. We don't have a system, right? And so, the challenge is finding point solutions where it's a wedge that you can start to get traction in. You can get to operational break even, right, in a capital efficient model, and then really grow inside from there. Whether your wedge and beachhead market is a direct to consumer, and then you prove out your outcomes data, or whether it's getting into a hair on fire problem within a health system, right? That's the biggest kind of recurring theme is it a big enough problem that the health system will actually adopt it, because they are terrible customers and, mainly pilot things to death and kill startups. And we're seeing them drop. The last time I was at Health, I walked the floor and I high-fived 9 of my former students who are CEOs now and in companies. But I estimated that over half of those startups on the floor of Health would be dead in a couple of years. And sadly, it's proving true, because, they can't get follow-on capital, or they didn't prove real world evidence or convince pharma or health systems to adopt. So, I think I do not shy away from, and in fact, I lean into backing founders with incredible ambition that want to attack the bullshit layers in healthcare with these rent-sinking intermediaries that add no value in healthcare, whether that's, a PBM or, PillPack attacked them. You need to have a clear enemy. And we've got so many nice people that are not traumatized in healthcare, and they're so analytical and they're so clinically deep, but they're not going to be good healthcare entrepreneurs, right? Most physicians should not be the CEO. In fact, they've been trained to be cowboys and not collaborative leaders in so many cases. Of course, Shiv Rao, fantastic cardiologist, breaks that rule, but there are exceptions, and when they are, they're wonderful. But mostly they've been trained away from entrepreneurship, away from creativity in a hierarchical guild.
Yeah, as I'm one of the GPs for a fund called Scrub Capital that really tries to bring in clinicians into just investment decision making. And we have definitely tried very hard to cultivate that specific type that you've mentioned, the sort of Shiv Raos of the world, the Tom Lees of the world who founded One Medical, Ali Khan at Oak Street, CVS. There's a bunch of examples like this. And one of the things that I think a lot of them can have in common is that they've spent a period of their lives working at not just the sort of academic health systems with a lot of resources, but many of them have also worked in really resource constrained kind of, lower income healthcare settings where they've had to learn how to do a lot with a little. And so I think there are ways in which you can find some of these physicians that are better set up for entrepreneurship. And then, those people can be incredible. I've seen very, very effective entrepreneurs because, they live and breathe the problem every day, and they understand the buyer mentality. So the question really, how do you pair them with the right folks? And then, the other thing that I see that's really interesting is a lot of these sort of young, up and coming kind of CMOs, chief medical officers that can be just paired with incredible seasoned entrepreneurs and really effective. One example of that, I think, is Oshi Health. Samir Berry, young, gastroenterologist, paired with the CEO, Sam, who's just a phenomenal CEO. And Sam and Samir, the two of them as a duo have just been so effective as well. So it's that right pairing that just seems to, really make things click. And I think it's a work in progress for us just to figure out kind of what that looks like, and how do you kind of, when you see it, you kind of know, but is there a way to sort of, mash those elements together and create something new? And that's definitely something that we're still feeling out.
Well, I love the Scrub Capital thesis and the community that you're building, right? And the answer is community.
Yes.
The True Ventures founders, taught me this and showed me this when they were investors in one of my companies. And the community is what builds that resilience, teaches the myriad of aspects that you have to learn as a CEO, physician, or former healthcare exec turned startup exec, right? Which is a really tough transition. And a lot of people can't make that transition from either big company or big health system to one where you're really resource constrained and you have to choose those constraints and put those constraints on yourself, right? Because it ends up being small teams go much farther and faster. I mean, Abridge is a perfect example where, Amazon, Google, Microsoft each spent 200 million trying to create teams to do exactly what they did. But Microsoft, Google, and Amazon shut their projects down after spending 200 million. And Abridge did it with 15 of the best LLM engineers in the world, and did that through the pandemic and came out with something that those folks thought was impossible.
I mean, definitely there are going to be books written about kind of the early Abridge days. It's, once this business has an exit of some kind. Zen, I'd love to get a little bit granular with you on just kind of themes I'm seeing in the market. So we mentioned PillPack, and that was I would say an early company in this kind of theme of, the consumerization of healthcare. And now I'm seeing that kind of really evolve. I think the next evolution of it was probably the Hims and Hers of the world, that really kind of came along and were able to sort of take advantage of I would say, things that are stigmatized and find really good product market fit there with saying, you don't want to talk to your family doctor or practitioner about these things, just do them online. And now it seems like we've gone a step further with some of these longevity businesses where I'm kind of spending a lot of time looking at each of these, whether it's Function Health or Superpower and others that, are saying like there's a whole quality of life, aspect to be unlocked with the right kind of set of tests and then kind of interventions, whether it be a medical intervention or a supplement of some kind. And people are really intrigued by this because they've never had access to this kind of information about their health. And this is the first time that they're being offered that. Really keen to hear what you think, Zen, about this consumerization trend, where people are really willing to pay out of pocket for access to healthcare knowledge. And how bullish are you on just this like new space, this longevity space?
Mitochondrial health. They're very interesting subsegments in this that have a lot of research coming out on the on the neural pathways, on the molecular pathways. So yeah, and you've got folks like Bob Nelson at Arch Ventures, who's one of my favorite investors and sat on my board for 6 years, putting $1 billion into some of these ventures, right, in the early stages. So they're big bets there, but there's a lot of science risk there. And then on the direct to consumer side, I coined it algorithmic care, where the patient knows what they want, whether it's, hair loss or erectile dysfunction or other stuff. They know the solution they want. These days, it's all GLPs, right? And then the question is, how can they get it? How can you deliver it responsibly, but algorithmically? New England Journal did a fantastic secret patient study when we invested in Nurex that kind of taught me about algorithmic care, that you could deliver the best guideline-based care better than an OB-GYN or better than some of these other systems, and match patients with the right contraception, match patients with the right thing, and do it responsibly, and send those exceptions to a nurse, to a physician, to really help the small number of ones that have side effects or complications or more complex disease. But the fact that we have a shortage across all specialists and primary care, and we're going to continue to have that in the US. And of course, it's even worse outside the US. So how do you take this line of patients that is waiting 3-6 months sometimes to see a specialist, and actually take them out of that line, treat them algorithmically, and then manage those exceptions so that the right high value patients can get in to see that specialist for the right procedures. So I think that's a theme that, I've even been speaking at down in DC to teach HHS and VA healthcare how to do this better so that they can make a more efficient system and get the patients what they actually desire in healthcare. And that's kind of that's the frame shift that we use, is desirability, good design, good clinical workflows, and scale it with technology.
I love that. Yeah, that really speaks to me, given I think there is still a lot of paternalism in medicine and this kind of belief in the patient doesn't really know what they want, or the patient doesn't even have the right questions to ask. And it's sort of been consistently proven not true. Patients do seem to actually have a very good sense of their own health and they know what they need oftentimes. And so, like you said, if you can just design around that, deliver a good experience, and then the key there seems to be the exception. So, really there is going to be a subset that does need an additional layer of help. And how do we design kind of to pull those people out?
Yeah, we don't give patients enough credit. And your own life story, what I loved when I first met you was what you shared about how you had to navigate for yourself and, have that agency, extreme agency of a patient. And not all patients have that. But, my investment in Molecule, which is using blockchain to take really passionate communities and fund the research. And then if something valuable comes out of that research, they automatically get these intellectual property NFTs and get fractional ownership in the patent or the startup because of parents with kids with a rare disease, right? The great example of how people want to know the research or the researcher that they want to fund, and you can pool those resources because you're completely aligned with getting the right data and the right experiments done, and doing it in a faster than the NIH grant cycle.
I love that. That's so cool. I'm gonna put you on the spot with a little rapid fire round. I'm gonna throw you a theme, and you got to tell me if it's underhyped, just hyped enough, or overhyped.
Great. I love the game show.
Yeah, it's a game show. Okay, so AI in medicine.
Hyped just right. I mean, it's going to be incredible.
Care delivery businesses that kind of serve as point solutions.
Could be good if the right dynamics for the patients, but there's going to be a lot of death and probably overhyped given that the systemic problems that they just can't overcome or integrate into.
Consumerization of healthcare.
It's probably about right. Probably overfunded these days in the last few years, but things are working out.
Med device.
Underinvested. The VC ecosystem with the sophistication to invest in medical devices and diagnostics has withered, and there are not enough folks with the courage and the depth to invest in those. And that is my mission, is cross-training more MDs, PhDs to understand the business models in healthcare.
That is a perfect note to end on, because I totally agree with you on med device and diagnostics. And I keep meeting with these incredible founders who are building, some that are even sort of at the intersection of digital health and device, which is more like the software as a device kind of plays. And there is just really a dearth of capital to fund these businesses. It seems like we want kind of, tech only, virtual only plays, or we want kind of hardcore therapeutics with nothing in between. And that feels like a very missed opportunity.
Oh, well, let me just add one more thing, which I think pretty teachable, which is we've got a lot of folks that have created tools, right? Whether it's a diagnostic or an AI tool. And it's so hard in healthcare to get valued as a tool, because oftentimes it's just, and I learned this from the Ginger.io team that my wife backed with Vinod Khosla and the True Ventures folks, but they had a great tool. They showed it was working in health systems. They could not get valued as that tool. And so what they did was they morphed and said, we're going to own the stack. We're going to vertically integrate and actually deliver that care in a better way using our tool and get paid for care. And so that's what I think a lot of point solutions end up having to adapt and grow into is actually deliver that care in a better way. And you're seeing that with radiology, you're seeing that with mental health therapy, but there are a lot of other ways that you can kind of put that pattern to use.
And I'm in violent agreement there with you, Zen. And I actually am quite bullish on care delivery, because I think it's a way to, if you own the actual experience of care, then you could incorporate all the technology to make things more efficient, whether it be AI or anything else. And I'm seeing, a lot of these care delivery businesses approaching margins that you would associate with software as a service or software only, because of this efficiency that they've been able to unlock. And I think in many ways, it's easier to do it that way than to just try to sell the tool into the existing system that may not even be receptive to it. So with that, I will say thank you, Zen. This has been a phenomenal conversation, just as I expected. And for people who are listening to the pod and would love to know how to be in touch with you, especially now that you're living in Bali, out of the country, how do people reach out, Zen?
They could find me on LinkedIn or zenven at mit.edu.
Okay, perfect. All right. Well, thanks everybody for listening. And Zen, you're the best. Appreciate your time as always.
Hope to see you down in New York.
Okay,
Thanks for having me on.
perfect.
Thanks for tuning in to Second Opinion. Share it with colleagues and friends and message us to let us know what topics you want to discuss on the podcast. If you want to support the show, the best ways are to leave a review wherever you're listening and make sure you are subscribed. And check out Christina's Second Opinion newsletter on Beehive. A link to subscribe is in the episode description. Second Opinion is part of Turpentine, the podcast network behind Turpentine VC, Age of Miracles, and more shows for experts by experts in tech.
Hey everyone, Eric here. At Turpentine, we're building the first media outlet for tech people by tech people. We're the network behind the show you're listening to right now. We have a slate of hit shows across a range of topics and industries, from our AI and investing cluster of podcasts to shows that drive the conversation in tech with the most interesting thinkers, founders, investors, and influencers, like Econ 102 with Noah Smith. We're launching new shows every week, and we're looking for industry-leading sponsors. If you think that might be you and your company, email me at ericaturpentine.co. That's ERIK at turpentine.co, and let's partner together.